What a week. We had a rate cut. I sold my daughter's house. I got into a heated disagreement with another agent on a different deal who doesn't understand contract law. It's really awkward. He actually messaged me saying, please send me the legal precedent that you're referring to. I actually replied, I'm not a lawyer. That's why I called my lawyer before I replied to you. We hosted another sold out US investing workshop, our best yet, in my humble opinion. We also have a great guest this week. What can I say about Cody Yeh other than he's a young hustler in a good way? He used to work as an engineer for Honda in Alliston, Ontario, invested in real estate, built an Airbnb garden suite, quit his job, started a stock option education and coaching company, built in that, what else did he do? He's also lived all over Ontario. Hopefully he's settling down. Actually, it's funny enough, when I interviewed him, he'd spent more time in the US than he'd spent in Canada at that moment. And then, of course, he's bought an apartment building in Ohio. So all this more and more on the Truth About Real Estate Investing show for Canadians. Now, how much fun is this real estate market? We finally got that rate cut of 0.25 as the Bank of Canada is finally signaling that the economy is weak as everybody knows it is. It's one of the weakest among the developed countries. There are more condos listed than ever. Local investment buyers' activity still seems low, and from my anecdotal evidence and speaking to other investor agents like myself, while my business in the USA investing in single-family houses is going very well. I'm having almost 2, 3 calls every day with investors interested in diversifying their income and real estate portfolio to the United States. I literally met with my new clients this weekend, Mason and Melissa, not their real names. My team had been helping them try to find a duplex in the Niagara region, specifically Welland, Ontario, which is a hot spot for many Ontario investors, and looking for a duplex in the $650,000 range. And I believe that would rent somewhere, based on what I'm seeing on Facebook Marketplace, I think the total rent for that place would be around 34 to 3,500 per month. Anyone listening, please feel free to correct me. Mason shared with me how he just did not feel right about that investment, especially with the affordability aspect, until he saw what we're doing in the US with Share, and he's since purchased a perfect BRRRR project, an off-market deal via a corporate wholesaler that Share has a relationship with. And funny enough, the wholesaler actually wanted the house for himself because the house was in Atlanta, Georgia, with a projected 6 cap rate. For those of you who know more about commercial real estate, that's in, for anyone who follows apartment buildings, a 6 cap rate, that's not easy to find. Now we're talking about a 6 cap in a single family home in a major metropolitan center such as Atlanta, Georgia. And so cap rate, I get this question a lot. It's funny because in small real estate, we generally don't talk about capitalization rate, which is the long form for cap rate. It's a common metric for commercial real estate, which would mean apartment buildings, retail, office, or industrial. It's simply your rent minus your operating expenses. Operating expenses being repairs and maintenance, property management, bad debt, property taxes, insurance, uh, all sorts of things. But before mortgage payments and income taxes. Uh, this is called net operating income, or NOI for short. Keep in mind, many listings leave out expenses. I literally was just going through a duplex in Brantford, the projected financials for that for a prospective US investor client. And yeah, and I say this to investors all the time now in Canada, specifically BC, Ontario, and Quebec investors. I ask them, what do you factor for bad debt, as in the tenant not paying you? It's really unpredictable. It doesn't happen that often, but if it does, it's often devastating for many investors, because I say to investors all the time, what is your worst case scenario? Can you survive with 12 months no rent? What kind of stress level would you have if you had 12 months of no rent in any unit in your portfolio? Versus you can avoid all those risks by just investing in somewhere that's landlord friendly. Anyways, this property in Brantford, this duplex I was looking at, in the promotion, it averaged a cash flow over $700 a month. So I dug into the numbers, and no surprise, the repairs and maintenance was quite low. The property looks 80, 100 years old, and they only factored in $100 for repairs and maintenance. There was no mention of property management, no bad debt or vacancy allowance. Uh, yeah. So again, they were light on expenses, hence there's some significant cash flow, even though that's not likely going to happen for such an old property near downtown Brantford, nonetheless. Now so to come with cap rate, you divide the net operating income by the purchase price, but you also have to include the initial reservations. So for example, if you bought a house for $80,000 and you had to renovate it $20,000 up front, now you're using $100,000 as a denominator. So again, so you as a sophisticated investor, if you need to know how to read a pro forma, which is aka the future performance financials, you can YouTube better explanations and visuals better than I can explain over a podcast. So in my experience, those who can't read financials are opening themselves up to being duped by somebody else. So again, education never hurts. I literally just telling a new client, who is new to investing completely. I just Googled commercial real estate, uh, and I found a Udemy course for a whole $30, right? Really inexpensive education. Um, Commercial real estate is a great way to learn how to crunch numbers and evaluate deals. So I get nothing for promoting Udemy, so just throwing it out there if you want to learn something for really inexpensive, which I'm personally really frugal, so I love a good deal and I love big returns for good deals. At the end of the day, Mason and Melissa got a sweet deal, as I don't know where you can find a six cap in a large economically diversified city like Atlanta, Georgia. If For context, if Atlanta was in Canada, it would be the second largest city based on greater area population. They also have, I think, what is it, 11 Fortune 1000 head offices in the city. Anyways, real estate investing in the USA simply makes a lot of sense. You have the majority of the rights. For example, in the state of Georgia, in the lease agreement, you may set reasonable limitations on the number of occupants during the tenancy. You can limit pets and smoking. You can actually restrict them or ban them in the rental agreement. In practice, landlords actually charge money for extra guests and for extra pets, for every dog that you have, also depending on the size of the animal. In Ontario, I have no such rights. I literally had a tenant, a single guy move in, a trucker. That's how he promoted himself. He's a trucker. So I thought, great, he makes great income and he wouldn't be in the house much. The perfect tenant. Then his girlfriend moved in and bred puppies in my duplex. My poor basement tenants rightfully complained about the smell, as the puppies were peeing everywhere, and the noise. But legally, I couldn't do anything about it. I suggested to my basement tenants to call the city and the police to complain. The tenants with the puppies even left for a whole day, leaving the puppies to cry all day and night, defecating all over the place and disturbing my poor basement tenants. Versus in Georgia, my lease will be worded to allow me to charge for additional occupants, limit the number of pets, and yeah, hence the reason I'm selling off part of my portfolio to reduce my stress, improve my cash flow. Yeah, I'm trying to be happier. Speaking of my daughter's house, it's sold and it closes before June 25th deadline, before the capital gains inclusion rate goes up on corporately owned investments. Doing so saves me tens of thousands of dollars in income taxes. So very happy to have done that, and I hope many of you are able to do the same to avoid paying this Trudeau government extra money. We had a deal, and then they changed the terms of the deal. I don't think anyone would be happy about that. The sale took me 3 weeks. I was honestly expecting a better market since everyone knew the rate cut was coming. My duplex being legal, move-in ready, vacant, and staged. It's as good as it gets, but the buyer activity was very low. Slowing your show off the start. It got better over time, and I only received 3 offers. All started low. 2 didn't come up. But honestly, thanks to my 14 years experience of being an investor and specialist realtor and having studied negotiations extensively and having some practice, I stood my ground on my terms and I got quite close to my asking price. Um, uh, Funny story, the agent who brought the winning offer did his back checking on me. He didn't know who I was when we first talked, but when he called me back, he said he actually remembered me as Mr. Hamilton from my rain days. We actually both belong to the same real estate investment network. So the importance is that my branding gave him and his clients a lot of comfort over the quality of the house and the renovations. This mattered because the city of Hamilton has been hacked. For those who haven't been following the news, they were hacked about a few months ago and they're refusing to pay the ransom. So they're suffering through being having disabled technology. Anyways, I don't have an easy way to prove the legal use of my daughter's house via zoning verification. Uh, anyway, so I have no proof that what the legal use of the property is, but I did have my permits. I did have copies of my permits, proof that my permits were closed, an ESA certificate, proof of insurance that I was paying for insurance on a two-family home. But it really was my word and my reputation that sealed the deal. Now, again, I've sold 4 of my houses in my portfolio. We sold one of our offices last year as well. I have some capital to deploy down south. We still do have a significant amount of real estate in Hamilton and in the GTA. So we're still poised to benefit from all this appreciation. But we're really lacking on cash flow. So I'm actually refocusing my search in the US for income properties with better yield and hence cash flow. So my new focus will be on more affordable areas, like really affordable areas, like under 200,000. So that excludes nicer areas such as like Phoenix and Austin, Texas. So I'm looking at Memphis, Tennessee, Birmingham, Alabama. I heard wonderful things about Alabama, Kansas City, Missouri, and Little Rock, Arkansas, home of everyone's favorite. Never mind. I'm not going to get into politics. Anyways, basically, I'm looking for 6 cap rates and up. I personally can't wait to start researching in each city. I don't know what it is. I just don't enjoy doing research. On to this week's show. Cody Yeh arrived in Canada at the age of 18 on a student visa, and he's from Taiwan. So, yeah, it's challenging for Taiwanese. So he was initially lacking knowledge in income and wealth generation. Over the past 11 years, Cody has undergone a significant transformation, evolving from a student to full-time project manager. That was at Honda. He has his engineering degree. Anyways, he eventually became a financial coach, a real estate investor, and a stock options investor, and he teaches all these things as well. The skills he acquired during this period enabled him to leave his full-time job at the beginning of 2020, in the pandemic of all times. Like I mentioned, he now has a stock options investing program, and he just bought a sizable apartment building in the USA. I don't know if he went firm on it. He's probably likely still in due diligence. It's been quite a journey. To follow Cody, his website is literally his name, CodyYeh.com, CodyYeh.com. Please enjoy the show. Hi, Cody. What's keeping you busy these days?
I just came back from US. I spent more time in US in 2024 than Canada. I just got a tour throughout Texas, Florida, and also we have exciting news that we just lock up a big building in Cleveland, Ohio. So that was literally happened yesterday. We have 45 days to work on contingency and all that good stuff. And of course, my set and done strategy for stock option has been going consistently. We're looking for double-digit returns every year. And what's different is that now I have a team of 8, including 5 coaches, and they're handpicked based on results and resilience. So now I just focus more on the long-term thing in terms of marketing, sales, and really build generational wealth for the family.
All right, that wasn't hardly a mouthful. All right, let's take it back. Let's take it back before you're buying buildings in Cleveland, Ohio.
Yeah.
So you came to Canada. You're an engineer. You worked for. Can we name the employer?
Yeah, Honda.
Right.
I was there for 6 years. I graduated.
Alliston, was it?
Alliston, Alliston.
The Civic. What's made there?
Civic, Honda Civic, and Honda CRV. 80% of those are shipped down to U.S.
Okay, interesting. We're pretty far from the U.S.
Well, they're near a train track, so most of the cars are shipped on train track, straight down to U.S. And I think they were trying to diversify their exposure. Right back then, Honda almost went bankrupt in 2012 because Canadian dollar was at par, if not higher than USD.
Yeah, so killed them.
At that time, they were like, yeah, Cody, if this don't change in 1 year, we're going to shut this plant down. And so that didn't happen. And then now they put in $800 million more before I left in 2019. So I think it'll be there for a while.
Very good, very good. Honda is actually opening a plant. You probably know they're in partnership with LG.
Yeah.
Near southwest of Columbus. Where's Cleveland? In relation
Cleveland,
to
Cleveland's east of Columbus, 2 hours drive away.
Okay, okay.
I almost went to Columbus, but we didn't have much context there. I was asking you for context, and then we're on road for like 2-3 months already. And Claudette, my fiance, just couldn't take it anymore. Yeah. She's like, "Can we just go home?
Buy something. Just buy something. That one's pretty. Let's get that." So what's interesting about your journey is you've done a lot. Because actually, that was continuing on. Like you were working at Honda, but I know you bought a few properties.
Yeah, yeah.
What kind of properties did you buy and why?
There's bungalows, there's 2 stories, and there's 2 duplexes. And then last year we just finished building a whole house behind a legal duplex in Clairton area. So for people that doesn't know, that's east of Oshawa. I wouldn't say that's the most successful one, but definitely taught us a lot of lessons. And really, we test the limit of small multis, and we see the limitation. And that's why I probably won't do any more going forward. It just doesn't make sense anymore.
So sorry, that was like a garden suite.
You call it garden suite, but it's only 1 square feet smaller than the front unit, but in terms of volume, it has 11 feet ceiling on first floor, 10 feet on the basement. That was a house that Claudette and I were originally going to move in. We have our own backyard, parking lot right between 2 houses, and so that was that. But I realized I screwed up because that was way too far from Oakville. That's where the in-law is, and if I ever have kids, I don't have support. So, so we just Airbnb that one up, and then thank God, we're getting like 40 5-star reviews since last May, and Claudette's managing that, and she's killing it. And that was just first year, while everything's boom and bust. Our Airbnb was quite consistent, like about 1.5 to 2 times of the long-term rent. So thank God for that. But do I want more? Not necessarily, because whoever we thought would be renting that house did not. I was not. We were aiming for OPG people. We're aiming for the people from hospital.
Yeah, Ontario Power Generation.
Yes.
So like, and that's how do you explain them? Luke Lyra used to work for them. So like a lot of engineers work there. Almost everyone I know that worked there was an engineer.
Engineers or people from US on contract come over. We thought we can capture those short to medium term people.
Were you near the Pickering Power Plant? Is that why you're?
We're in Bowmanville. Like their corporate office. We're supposed to move there. That's why I started building it there. But I think they end up to move to the nearby city. But it's still in the area.
Got it.
Yeah.
Okay. So you've done multiple properties, small, singles, multi.
Yeah.
How much was this garden suite to build? That's a little different because you were intending to live in it, so it's probably really nice.
No, we're very fortunate because we bought the house right at the height. We bought it at the worst price possible. Overbid it and all that. But our golden parachute at that time was we're gonna build a garden suite. So we're gonna either live in it or rent it out. So that will cover everything. So right now with all that, we gross about $10K per month.
For the whole property?
Yeah. Our mortgage is about $6,400.
Woo!
Yeah, $6,400. And then, because we did a refi with commercial, with Meridian. So we strategically pull out the most money possible, but because of DSCR, we can only get a mortgage up to a certain level because it's a DSCR 1.2. They can't go any higher, even though they appraise for much higher. Yeah. I have $300K equity stuck in there because they just say DSCR won't work. And so I went through a whole long shot of how to get the maximum out. And then that's not, I wouldn't call it very successful, but it's cash flowing, right? 10K grows, and that's like going through first year, the doom of like Airbnb. So like probably netting, the way I asked Claudette is that, hey, are we cash flowing positive? Because she's going through the whole bookkeeping. She said, I think we are because I can draw money by the end of each month. I'm like, okay. So it's probably about 1,000, 2,000.
That's fantastic.
Or maybe 2,000 plus. Yeah.
Right. Partly possible because you're self-managing. So.
Yes, she's
if
managing.
If you're paying someone else,
then that
because you're giving up $2,000 or so.
And then it will be
struggling.
Put
you in the negative.
Yeah.
Right.
For the debt service ratio mortgage, was that based on a corporation or is it on your entire portfolio and you or?
That is so I went through a lot of hoops. I know people are listening or probably want to know. There's a whole you really have like I didn't go to the banks because the appraiser might not understand what an
Yeah.
ADU yet,
Yeah, yeah.
and there's not
Or
a lot of
Airbnb.
comps or Airbnb. So you really have to get involved with someone to understand it and know how to position it.
Yeah.
And that's why we went with Meridian.
Right.
And
Your
they
local Meridian branch.
no, I was through a broker, mortgage broker.
Okay, but were the Meridian people local or out of Toronto?
Yeah, they're local.
Okay,
And up the last time when we signed the paper, yeah, he drove to my place and we signed it.
Yeah, yeah.
So talk with mortgage broker and say, we figure out appraiser a commercial appraiser. So I pay I think like 1,500 or 2,500, I forgot, for appraiser. But it was all worth it because if not, no one really understand how to do appraisal for that. So I have to weight the pros and cons, and I went with that and end up leaving 300K in that property, but it was already as a collateral, as in if I need a down payment for something else or collateral for something, it could be used. So I decided to just lock that in, and it's not like we're gonna do anything for the next 3 years on that property because, yeah.
Okay. So garden suites are a popular topic. Can you share like how many square feet was it?
Yeah.
Did you do modular build or did you do stick build or?
Well, I was looking at a lot of modular build, but I didn't see anyone really successful with it. So we just I hire a local contractor. I always try to hire local in case you run into any problem with the neighbors or the city, easier to talk to. So we hired them. The square footage, just like a bungalow, so like 950. The ADU is like
big bungalow.
949. outside 950. So maybe inside is what, 900 maybe.
Still big.
870,
Still a big bungalow.
right? So that ADU we built it as a 2 up and 2 down, 2 washroom, and it looks just straight out of magazine. Everyone is like, we put some Porsche's magazine in there, and then we stage it nicely. We didn't spend a lot of money strategically because I have one of my student is the VP for Umbra. Do you know the Umbra?
Yeah.
So he got us
They make patio. Wait, no, they make furniture.
all these decorations, not furniture, but all these decors.
Okay, good.
And they make nice things. And he basically helped me up a whole list. Within an hour, we got everything down, and then I got a huge discount. So big shout out to Matt and to Umbra for helping me out on that. And so yeah, we spent I think all in with landscaping, with fences, with the pavement in the middle, all that. I'll say the ADU cost me about $500,000 to $550,000.
Fantastic. 550.
Yeah.
So I had to break out the calculator.
Yeah, like on its own, it's probably about a nightcap if you really do the calculation.
Right.
Because I was on Andrew Hines' podcast, he's like
Yeah.
nightcap. I'm like, hey, that's not bad.
It's not bad.
But look at a deal on its own. The whole thing is not as good as you thought it could be, right? But if you look at it from the standpoint where can you build another house with that price on the same lot, then you cannot. So long term, I think it will do well.
Yeah.
But if you're looking for like a win with flip, it won't work.
Right. Well, for long-term play, this should do well.
Yeah.
Curious, what would the long-term rent be on this
I
900
would say
square
probably
foot?
3,000.
3,000.
Yeah.
Got it. Interesting. Yeah, because we were talking about Texas earlier. Like you can buy a house for like $375 American that'll rent for 3,000.
Yeah, depending on where.
American numbers.
Yeah.
Dallas, not Dallas.
Yeah, Dallas.
Yeah.
Yeah, Dallas is different area. We went all the way from north, south, west, east. And then, yeah, you can still find a maybe 0.5 to 0.75 rule. And if you really want to go like an hour drive or an hour and a half drive outside, you can potentially find a 1% rule. Yeah.
Yeah, no, absolutely. Like I'm looking at 1% rules in like Columbus, Ohio, for example. But just to finish this example, like I look at garden suites and I think, I can have a house. I can, like that house I mentioned in Dallas, it's $375 American.
Yeah.
Rents for 3,000. This garden suite costs you a lot more than the cost of that house in the States.
Yeah, I mean, there's a conversion, right? 375 times a 1.35.
Oh yeah. Like your
And it's
gardens-
brand new, and it's on existing lots. And then we built it. There's a back door, and I was like, damn it, that bill when Doug Ford came out and said about fourplex, he was gonna push to fourplex, right? And I was like, yes, it's coming. And he said, no. So we built a back door, and it's 2 levels, so I can easily do another up and down really fast, right? Just like put it off, put laundry in, done. Another up and down. We already figured everything out in the drawing, but I just didn't go ahead. I was chatting with Ryan Carr before I did this. Like, should I do it? Should I not do it? Ryan's like, nah. Depending on the inspector, just don't do it yet. It's not worth it. Just do it when it comes to the point.
Yeah, just to finish the example, like you're 550. That's about 412 American.
Yeah.
So I know that includes landscape and whatnot, but again, I can have a house for less than that.
Yes.
That comes with
definitely.
land, and it's in Dallas.
Yeah, you
which is
can
the
get even cheaper stuff. Yeah, there's a lot of different places in U.S. you can get it for cheaper too, right? Depending on what you're looking for.
Yeah. So why did you choose those locations to go visit? Texas, Florida, Ohio.
Originally, I went to Texas because it's winter here.
Yeah.
I don't write out things and travel.
Yeah.
And Claudia just quit her job as well at the bank. So we're kind of going on a half vacation, half exploring. Yeah. So we went to Texas, went all the way from Dallas. We landed in Dallas. Yeah. And then we went through the whole Fort Worth, the rodeo, the whole shebang. We were there like 2 weeks. Yeah. And then we went to Austin. Yeah. Austin's a whole different scene. And then went to San Antonio and then Houston. Then we flew to Tampa for another like 7 days, and I flew back to Toronto, and then
You're gone a long time. Holy!
Like I said, I was in USA more than Canada in 2024 so far.
Right. So hang on, were you gone for like 45 days?
More than that, yeah.
Oh, okay.
Yeah,
that's a long trip.
Yeah, it's a long trip. So
longest trip of your career?
Yeah, for like intense like property hunting, having fun. So we were kind of tired at the end and say we should probably come back. But then I drove to Cleveland, Ohio because of that deal. So yeah, because of that big building, we have opportunity. So I was doing some due diligence in the area, looking at their existing track record of other buildings, and then because I'm gonna bring in some friends and family too, and my own money. So I always put my own boots on the ground. I don't want anyone to put in money unless I put in it first, especially the second deal.
So what can you tell us about your trip? Other than Ohio, we'll talk about that in a bit. How was Texas and Florida?
Texas, of course, we all know is more landlord friendly. It's more business oriented there. So if tenants don't pay or the lease comes up, you just say, hey, we're going to raise the rent, or sorry, you have to move, kind of thing. And it's a lot easier to raise. But the biggest drawback about Texas is their property tax.
Oh, it's big, yeah.
The property tax is about 2.5%. So think about if you buy $1 million house.
Toronto house.
Yes. So the property tax is something that's very scary, and it has been going up by 10, 20% or more, or 40% last year, because Texas don't charge state tax. So they got to find ways somehow to get the tax. So property tax is one way they're trying to get back. So that's something that's unpredictable. You can get the property tax like 0.25%. Reduction if you as a homestead, as in similar to like a primary residence as Canada. But how many homestead can you do? Like the homestead rule, I don't want to talk about it here, but it's a whole different rule. Every 2 years, if you move a house, you could treat it as a homestead. But that's the biggest thing, right? So biggest
but it
thing.
Also comes down though, because it's indexed to the price of your home, and they evaluate it every year, not like here.
Correct. Like it's still hard to find a 1% rule. I was trying to search for where you find a 1% rule will be the houses that have been stagnant for almost the last 5 to 10 years. But whereas the location that gone up a lot has been where the north side of Dallas, like I forgot the name, sorry of F, but where more the tech is at and more Asian people are moving to, and all of that. So there's still opportunity. It's just that Dallas, I think, is overall the most balanced within the Texas city, the 4 cities I visit. Austin is, I think, way overbuilt, in my opinion, because I see a lot of I've never seen so many new builds that are empty. But I think the demand will eventually catch up, especially there's a lot of AI wave and a lot of tech layoff in Austin. but I think Austin is a little bit bubble. So, I mean, a little bit bubble in terms of the supply and demand, and also in terms of their price. They still try to adjust, so they're slowly coming down a little bit. But San Antonio is very slow, slow and peaceful. That's how I call it. And then Houston, it's just so big. Anytime I look up a Google map, want to go for Chinese food, it's like, yeah, it looks like oh my God, 20-minute drive. It's just like you look at a small,
Right.
small few little centimeter on map.
It's a spread out city.
It's very big. It's very big.
Have you been to GTA?
Yeah. Well, GTA, it's because of the traffic, but Houston's because of the real distance. There's a ring 1, ring 2, ring 3, and then there's area we can buy condo for like $50K. But then, you know, out of all that, I went to Tampa. I don't know how I feel about Texas. I don't know if I want to raise kids there, but I think, and then it's still quite cold in the winter. It's not as hot as the Panhandle, so that's why I went to Tampa. Tampa, I have a lot of positive things to say about Tampa. A lot of younger people. Everyone seemed very happy. A lot of young family. A lot of pets. And just the development, they're really doing a good job. The streets are clean, people are nice, things are reasonable price, and you don't see the big city problem yet. And it's kind of like almost like Hamilton, you know, back in the days we were very into like mining and metals, and now they're like trying to transition into more diversity. And yeah, that's how I felt in a nutshell.
I imagine Tampa's a lot prettier than Hamilton. No offense to Hamilton, but
in the winter for sure.
Yeah.
In the winter for sure, yes. Tampa, it's definitely really nice. I don't mind spending, if out of all the city, if I want to spend winter, I will spend my winter in Tampa.
Yeah. Florida has that over everybody else because they're just so much more southern. But yeah, we were talking before recording. There's nothing perfect, right?
Nothing is perfect because the reason why I moved down there is because we're actually thinking
You were visiting. You didn't move.
Not moving. No. Moving is a whole accounting, declaring no. It's just more like for the family's future and where I'm going to have kids and where's the business going to go, because more than 50% of my current business all come from U.S. And does it make sense? I could easily apply for a visa. And then I truthfully think, like I'm grateful that I was in Canada for 15 years. For the last 15 years, I got my passport after spending 11 years. But I really think that things are changing in Canada. The new people are coming. I'm not blaming the new people are coming, but the older people that were already here were immigrant, like myself, 15 years ago, are definitely feeling that Canada is not as good, not as beautiful, not as opportunity as 10 or 15 years ago. Right? So that's where I start thinking about, if I want my kids to grow up, do I want them to have a bit of limiting belief and mindset on what you could do, or do I want to raise them in a more open-minded and business-oriented place? And I truly think any kids, if they grew up in Canada or US, I really think if they grew up in US in the right school, of course, it's very diverse. Okay, don't say hey this and that. Overall, I think if you pick the right location, any kid could only wish for they grew up in USA, because if you can think about it, you can do it in the United States. There's not much of a politics, not much of a life-threatening events that you have to worry about, not much about, more that will take your focus away if you want to do something. You grew up as a happy kid. There's no excuses not to succeed, in my opinion. So if I could do it again, I'll probably do it in U.S.
As a parent, for example, I see all these folks who are planning for their children to focus on their second language being French.
Yeah.
Right. I think about more of a global scale, because people who plan for French, like that's great for a government job. I would not want that on my kids. I'm more thinking like Mandarin and Spanish.
Yeah, that's exactly why I actually speak a little bit Spanish.
Right.
And I push for that since 2017.
Right.
And I look at a global scale, right? What's the most spoken language in the world? Yeah. What's the second one? What's the third one? English, Mandarin, Spanish, top three. Right. And
it's
then
the national language of the U.S. as well.
Yeah.
And if you have clients that are American,
Yeah.
How many of them speak French?
Yeah, yeah. And I think beyond that, I think there's a different culture in terms of the French people and the Spanish people. I found it, okay, again, don't shoot me. I found the Spanish speaking people more welcoming, more approachable. Whereas the French people have their own way. Things not necessarily a bad thing, but they're less inclusive, put it that way.
Well, Quebec is ejecting their English speaking schools, so I hardly call that inclusive.
Yeah, yeah.
We won't go into, we're going down that path. Yeah, so I've noticed it for a long time. We've known about it in Canada for forever. For example, our lack of doctors is a symptom of brain drain. Like, if you were a doctor, I can work less, I can see less patients, probably make more money in the States than in Canada.
Yes.
Right? And I'm going to guess the immigration's pretty easy for a doctor to go to the States.
Yeah.
Right?
I have quite a few student clients, friends, are doctors from US, and I see, because we do a discovery KYC call. Sorry, yeah, KYC call.
No, your client, yeah.
I'm not a licensed broker or anything, or advisor. I want to understand where they're coming from, see if we can help them. I see a big gap in the earnings. Even if it's the same number, one is USD, one's Canadian. So you know what I mean?
Right.
And then the amount of patients you have to go through, and it's very, very different.
Yeah.
Right.
Like, if you're a nurse as well, like, again, you can see less patients. Your housing costs will be half. If you live in one of these states with limited state tax, your income tax is almost half.
Yeah.
Or, yeah, you beat on the property tax, but again, nothing's perfect.
Only Texas, though. Only Texas, yeah.
It's a general thing when anyone that has low state taxes, then they're going to get you on the municipal level. But Texas seems to be the extreme. At least it's such a popular destination for investors. That's why we all know about it. And then at the same time, like, you're an engineer. Like, here's an engineering thing as well. Like, we were talking about Honda opening up in Columbus, near Columbus, Ohio. Hyundai is opening up a bunch of plants as well. Toyota's opening up a plant as well. Like, if I worked for any of these companies in Canada, I'd be looking for a transfer. Because I can go from Alliston, I can move from Alliston, I can now go to somewhere in the States. My housing costs will be half. My income taxes could potentially be halved again. And I can much nicer weather. Right?
Yeah.
Because, like, what's the average home in Alliston? 700,000?
Yeah. When I sold mine, it was 1 million, a 2-story, but that was right at the hype.
Right.
I was just lucky. I was trying to take all the money and build the ADU, so I sold it. But yeah, right now I'll probably say so. Yeah, 700-800.
My point is, I don't see much of a future for manufacturing to be in Ontario because it's just so expensive. How are you supposed to hire people? Right?
Yeah.
And again, I can just open up in the States, and I can, if I'm willing to help people in their immigration, I can bring Canadian talent down.
Yeah, and a lot of my friends, after they left Honda, they went to Ford in Ohio or GM in Ohio. It's easy. They were poaching people left, right, and center.
And their housing costs are probably a third.
Yeah. Even before I left, like, Apple was poaching me, Tesla was poaching me, Panasonic in Atlanta.
All U.S. locations?
All U.S. locations. At that time,
U.S. dollars?
Yeah, and then at that time, I think I started with $120K.
Right.
I was making, like, almost double what I'm making, including exchange rate. The only thing I couldn't go down is because I want my Canadian passport. And I only have Taiwanese passport with working visa.
Oh, so you'd lose your path to getting the passport.
I was like waiting. They called it the immigration jail. I'm like waiting for that period.
Yeah.
But after I got it,
so we keep talent in Canada.
I know. But after I got my passport, already an entrepreneur.
Yeah.
Then I'm like, okay, it doesn't really matter where I am anymore.
Yeah,
So.
Yeah. Are you moving to the States?
Could be. Like right now, I just moved to Oakville. In case you don't know, I just moved to Oakville, closer to in-law and all that. But I'm flying out to Morocco in 3 days for 10 days.
US, but yeah.
And that's not US. People, what business are you doing there? I'm like,
vacation?
Yeah, more vacation. I just like exploring because Claudia is going on a growth trip to Italy. So I'm like, I'll try to find the closest time zone place that he will be at, so it's easier to communicate. And then we're going on a cruise for 2 weeks, April and May, and God knows what's coming. Like usually I try to stay here in the summer in Oakville because it's so nice.
It's so nice here in the summer. Yeah.
And golf is so nice.
Yeah.
And then I think that's the part I like about Toronto is the summer, June to August.
Yeah.
I want
nice too.
September or like May to September. I want to trade for anything else, but the winter is very harsh.
Yeah.
now that I have more time, a little bit more money to enjoy, I never thought about that until I have that freedom. Because when I was working full time, putting out overtime, people were like, the weather is bad. I'm like, well, I don't feel it. I'm always in the factory, or I'm always at real estate seminar, or at home trading or whatever. I never outside to see how good or how bad it is, right? But now I have more time. It's like, I actually have options. So, and it feels good to have that.
Right. Yeah. Now let's talk about the entrepreneur side, because you've tried everything. Like I believe you had your real estate license, your realtor's license. Did you have your mortgage license too, and your securities license?
No, I got my first
Uber license.
I passed my first exam in realtor in 2019. That was because the realtor I had at that time inspired me. I said, Cody, if you ever want to become a realtor, get it now, because they're going to switch to Humber College soon. Yeah. I got one. I never thought.
It would add like you'd have to do 2 more exams before you practice. Yeah.
But I never thought about going to become one until I become an entrepreneur, and I was stuck at home during COVID. I'm like, I like these modules. I actually learned something about the house and the appraisal, all that. I'm like, I'm just going to push through it. $3,000 fine. I got the license. I hang it right at home. And never look at it. And I know the branch manager, he called me, he's like, Cody, I guess you're making money elsewhere, right? You don't really love doing this. I'm like, yeah, I don't tell anyone I'm doing this.
Okay, so do you still have your license then?
I park it. I park it, but I think it's like, I already deactivated for 2 years.
Right.
I just don't find the passion for it. I don't find the passion for it. And truthfully, the data has been more transparent now, so you don't really need to be a realtor to run comps anymore.
I love Self Sigma.
So, like, what is the advantage and how can I differentiate myself? Whereas I should focus on what I do best, which is stock option, what I'm known for, and double down, go deep, instead of being like a realtor like everyone else. I'm sorry about a realtor, but there's a lot of realtors out there. You got to think about how to differentiate yourself, right? And I couldn't find a competitive advantage.
The successful lawsuits in the States are scary, and I know they're coming into Canada as well.
Yeah.
If I was a realtor dependent on realtor commission, I'd be worried.
I would really say you have to be specialized in something as a realtor. You can't just be based on relationship, because at the end of the day, when push comes to shove, comes to money, you have to show something that you know that other people don't. Not just because you're my uncle or auntie, right? Unfortunately. Yeah.
So let's talk about stock options, because I remember you telling me you were trading Asia hours. Wait, you were trading Asia hours because you were...
I was working full-time at Honda, 2015 to 2017.
You had a day job.
I had a day job.
So then you went to your night job.
Night job is after hockey, after eating dinner. And if there are days that, I used to come to your event too, remember? Whenever you don't have an event, Right Club doesn't have an event. Back in the days I joined Rain, that was like 2016. But if they don't have, I stopped going. I was a little bit disappointed.
Right Club's a bad word. They have lawsuits against them.
Who, Right Club? Oh, really? Okay, I'm sorry. I'm not in this world. I'm so sorry about this. Okay. But when I'm not learning about real estate at that time, I'm at home trading the Asian market, because that's the only time I can find quiet time to be ethically pursue my 5 to 9. 5 p.m. to 9 p.m. passion. I did it for 2 years. Claudette, my fiance now, was with me at that time, and she really thought it was a Superman, because a lot of time I sleep at 12, I wake up at 6, and I drive for an hour up. So...
Drove for an hour too?
Yeah, like there was time where I stay in North York, because at that time she was in North York. I'm in Alliston, right? So I was, going through different things. Sometimes I really want to see her during the weekday, so I drive after the real estate event. I drive to North York to say hi, have a hug for 15 minutes, and I drive all the way up to Alliston, and it was 12 already. So there's many times don't want to throw out the scary example, but I fell asleep, and then if there's God, it was God at that time woke me up. 4 lanes
the
down.
Full self-drive took over.
Yes, at that time. Yeah.
AI was keeping you safe.
Yeah.
And so then you, what made you stop trading the Asian markets?
At that time, the strategy was very different. My day trading coach at that time, a very young lady, was managing about 50 million, nowhere to be found on social media. She basically does, kind of like the debt fund style kind of thing, and then she was managing, helping people with making returns and all that. But she was teaching me how to do hour trading, like kind of like they call it day trading, but we kind of only trade within that hour when the market has the most volume. Usually it means that the market open for 15 minutes, let it cool down. The next hour is when we trade. That's it. That's when the most action happened. And then at first I was losing money the first 4 months, even up to 8 months I was break even, and then slowly going up. But I realized it's not scalable because even my contracts start slipping. We're trading the S&P 500 future equivalent of Taiwan. And there's just...
sort of like the 500 biggest companies in Taiwan?
Yeah, there's equivalent.
Okay.
The indexes.
Yeah.
I was trading that future. Yeah. And I was like, if you cannot imagine what kind of stress I was going through, imagine you, like people were like clicking or whatever, making trades, swipe right on their phone or whatever, right? At that time it was a screen. They called it the lightning trading. That was like 7 years ago. I don't know what's it called right now. Lightning trading. What does that mean? Is that you have a screen, you have a strike price or a stock price or index price all the way from, let's say 5,000 to 5,050, and then you can click. You can time 10. One click, it's already in. Do you want to buy or sell? You click. You're clicking. You're not even typing in. You're like, you put 10. My stop loss is a whole line like that because in case it slip. And I have to adjust. If it slip, I'm like, okay, I need to adjust. Oh my God. Like, so that kind of lifestyle, it's not very sustainable. Yeah. And at that time,
you have to have a certain personality for that.
And my day trading coach has 50 million, but she can only use 2% of her money at any time because the market can't take it.
Oh, it's a smaller market.
Yeah. And she has to go to Hang Seng, like the Hong Kong or the German one or Dow to use her strategy, right? So I'm like, can I do this for my whole life? No. Was it a good skills to learn? Yes, right? And that's why I keep looking at other stuff. How can I be more passive, like the option stuff and all that, right? And we take different courses. You had a course, I took yours too, right? I went through all that, and now I have my own, have coaches, and really we always look at the mistakes I learned and staying very true to myself is what someone who has money, not saying I have a lot, but with someone who has money, who has high income earner, would that be a sustainable lifestyle if we want them to do that? If not, what is making that impossible? And we identified that as picking individual stocks is very risky. Even Warren Buffett is hard to pick. And then
his insider information is different.
Yeah,
he
can make a call, right? But
or he's even invited to the key meetings.
Yeah,
that nobody, with like the key players and stuff that you and I have never privy to.
Yes.
Yeah.
And so I eliminate individual stock risk. So now we only do it on the S&P 500 future options, right? And the next thing is spending too much time. You're basically finding a second job. So for most of my clients are high income earners, have a family, have young kids, or their kids are empty nest. We even have clients and they're 70-year-old. We have 3 of them. And they're not looking for a second job. They want to really have options and enjoy life. So we took away all this risk, individual stock risk, and then all the too much of a volatility, and then you want to keep making money if the market don't move. So that's why we settle on our said and done strategy. And I guess that's why TD Bank asked me to speak for 3 times. Maybe that's why, because they're like a lot of the retail investor was losing money coming out of 2022. So they really want to hear someone.
2022, everybody was losing money.
Yeah. Well, depends, though, right? We have a small dip, but we were still in the green, though. So not that I have the crystal ball. I just thought everything was so high, and we keep learning lessons going forward. And now we really settle on, don't pick stocks. Yeah. Want to make money even when things don't move. And we have stop profit, stop loss, and we have active management strategy. If we do really comes to the point once every year, we need to deploy it, probably. And we can decide to take a 3 to 6% stop loss while your account's double-digit return already. Small stop loss, you're still in the green. Or you can just keep rolling and rolling if you do want to, right? Depending on how people want to pick that. Just a lot more hands-off. We only spent 30 minutes per week now, so.
The whole effort is 30 minutes per week.
Yeah, because in the past I did read the news, I post the news, I show my trades. Now I have 5 people. Like my brother, Steven, lives in Mississauga, also engineer, has been working for me for the past 3 years. He's now my head coach, and he truly helped me make the system a lot more perfect. Nothing is perfect. A lot more robust. A lot more for dummies, for monkeys kind of thing. And we take away all the risks. Our return came down, but we still like last year I hit 36, just myself, okay? And even our lower end clients hit 6%, 12%, 20%. Web clients hit 76, but I never want to talk about that because they got on some AI stocks and all that. But this strategy I'm aiming at is like 18 to 30%. I'm quite consistent on that, right? If you do it right and follow the system. So I'm happy with that because that's more than private lending. I don't have to do much. It's on my phone. I have full control, right? So.
Well, can you tell us more about the strategy? You mentioned you're removing risks. I think you mentioned
Correct.
another time you're just focused on the S&P 500.
Correct.
Just trading the S&P 500.
S&P. So it's not, for people who are listening, is that I'm a stock trader. It's not SPX. It's not SPY. It's ES. It's the S&P 500 future options. Right. And there's many reasons why we've done that, but just a few is because it's a European style. There's no early assignments, so you have full control.
Oh, that's nice.
And also, you only need half of the capital requirement to put in, so you have more flexibility. And
sorry, well, how much is a contract for?
For the strategy we're doing, for the people less than 20K, is 5,000. So we trade on MES. MES is just a mini version of S&P 500 future option.
Interesting.
MES. And then ES takes us about 20,000. It's not that you really need that much money. We already put in buffer. We only deploy 30% of our capital at any time, max. Right. So 20K is, we already say we really only need 6K, but we say we want 20K just because in case there's some people too aggressive or if the market turn, volatility spike, we have a lot more room. Like we chat with IBKR and the Tasty Trades people and Thinkorswim. They were inviting me to be up there. I should probably follow up on that. But yeah, we did do all the back testing. I say we wanted to be the safest and to be the last one standing, right? Because I learned from Warren Buffett, it's not about how much you make in any single year. We want the consistency of it. And that's what we're looking for.
So when you say like, so you mentioned like you had your target's 18 to 35%.
It's like more like 54, but I would say I want to promise lower and deliver higher.
Is that a percentage of the capital at risk, or?
That's the percentage of the entire portfolio.
Oh, okay.
I don't like people when they talk about single trade. I personally put out a video, my most viral video is at 1, 2, 3%, but that trade projected out a year. But when I talk about this return, it's on the entire portfolio. So I only use like 30%, maximum 40% of my capital. Right. I return that double-digit amount. That's the only way I think it's reasonable to share.
And so you're selling options? Are you doing spreads?
Yeah, we're selling spreads on the S&P 500 future options.
Got it.
Yeah.
And then what keeps you safe? Are you far from the money? Is that why?
Well, we're very far from the money. Our delta is really low. Sorry for confusing people. Just the chance of you getting in trouble is really low. And also because S&P 500 inherently has a lot lower volatility than NASDAQ, like the EQ and all that. Yeah. So like NASDAQ, just for people's shits and giggle, I was chatting on NASDAQ. They want me to speak about it, but they asked me to only speak about NQ, and I rejected. Like the head of option.
NASDAQ futures?
No, yeah, the NASDAQ future. They were like, Cody, come speak, but you have to promote our index. I'm like, I'm not, because all my clients know I'm not doing that. Right. So they were like, why not? Why not? You can make double the money. I'm like, I know, because that's volatility works, but we're not looking for the maximum return. I'm looking for the lowest risk with most consistency. So I'm sorry. Right. So I probably give up a big opportunity, but I think I stay true to myself and my client.
Mm-hmm. So this is back up. I guess we should explain S&P 500 is Standard & Poor's 500 biggest U.S. companies. And then NASDAQ, some of the company overlap, like Apple. Who else would overlap? Microsoft, they'd be on the NASDAQ.
Yeah.
I think. There's overlap. But
there's overlap, but S&P 500 is the index that Warren Buffett is willing to put in 90% of his asset. Once he passed away and he cannot find a successor, he told his wife if you cannot find a successor, 90% of Berkshire Hathaway goes to S&P 500. That's what he said. Like, if people can go Google it.
Maybe if it's publicly traded, well, he's got private.
Private money. Yeah.
So private equity stays probably there.
Yeah.
Maybe when it goes public, then he'll move to the S&P 500, something like that.
Yeah. Basically, that's just trying to say that Warren Buffett believes in the future of the best companies in US and rebalance itself too. right?
He's willing to make a bet on the U.S. economy, essentially.
Yeah, and there's so many things.
That should kind of say something about our real estate investing.
Yeah,
the world's greatest investor bets on the U.S. economy.
Yeah, like, yeah. I mean, for me, I'm so fortunate that I'm making USD, not just from the coaching side, from my own profit, from the trading side, but also we're going to the US side to invest real estate. For me, it's diversification. For me, it's the currency dominance. Because I've been searching for what's coming next that can potentially take over US dollar.
Yeah.
I haven't found that.
The won, come on, the ruble, Bitcoin.
I have one Bitcoin. I bought it at 10,000. But I mean, I never thought about that's my ticket to the Mars. That's the way I look at it. That's not how I'm gonna get rich. My grandkids can enjoy it, whatever. But if we talk about more realistic thing, that tangible thing.
Come on, the BRICS are gonna take over based on Chinese bank. I know people are gonna hate on that. It's just like, oh man, like dig into the Chinese economy and how much they're hiding from us and how much vacancy they have in their real estate developments.
Everything is fudge. Yeah, because the reason I said it because my fiance that run multiple business there and
in China.
Yes, so we have seen the ways, and every time you say something not good about the country, there's like people are very honest sharing things happening. The video got taken down, things like that. So they got personal, like there's.
Oh, go check out for anyone interested in saying something absolutely crazy. Go check out. Go on YouTube and search Paris in China. Have you seen that one?
Yeah. That's they built a city that looks like Paris, but no one's living in it.
It's like 80% vacant.
But there's tons of city like that in China.
But that's nuts.
Yeah.
So all these developers probably all went bankrupt.
Yeah, or they built it, but they couldn't sell it.
But how do you not go bankrupt then?
Maybe that was backed by government. Government was trying to use infrastructure. So, all trickles up, right? So,
how is that a healthy economy?
So, and then, so if anyone is holding any Chinese stock, I do have Alibaba and all that. Not name dropping or anything, not stock advice. They're not doing well, but it's a small proportion of less than 5% of it. Will they come back? I really don't know. But I really thought at one point China, because I listened to Ray Dalio, I study economics, kind of like you. I know you're a nerd about it. I thought China had a chance, but there's just so many politics involved that I think when there's small group of people have so much power, I don't like that anymore because I was just in Vietnam.
Small person has a lot of power. That's one person. He got rid of the competition.
Even I came back from Vietnam. I look at another country similar to that. Yeah. I want to buy land there. And they told me stories that the city can sell you land in the city registry, but when federal come here want to build a bridge, the city never reported up to the federal about they sold you that piece of land. So when the federal comes, they want to take your land back. You have nothing.
Good land security, yeah.
So the moment I heard that, I heard a lot because I make a lot of friends that are more elder than me, Vietnamese, half Vietnamese. They're like, Cody, just watch out. This is what gone through my family. I'm like, okay. For me now, it's not about the maximum return. It's about stability. If I make double digit, I'm doubling my money every 7 years. At least. So what am I chasing for? But not for everyone, right? Some people might be on the early stage or trying to push, right? But I just don't want to go through that anymore.
Everyone has to find their own path, and like you're sharing how you find your own path. My friend Glenn, who's a U.S. investor,
Glenn Sutherland,
he buys in the middle of nowhere.
Yeah, Alabama.
Yeah. So like he invests in the U.S. Yes.
Huntsville.
I'll be investing in the U.S. Yes. I'll be looking at Huntsville. I'll be looking. But I'm generally going to be more close to the major centers.
Yeah.
Right. So I won't necessarily find those 1% rules, but. I'm a different age as well. I want boring. But
you're not that old, or when
I'm a lot older than you.
How old are you? You're early 40s, right? I'm
mid 40 now.
Mid 40. No, I mean no. It's just for fun's sake. A lot of people call me Erwin.
Oh my god. Yeah.
Are you Erwin or Ping? They're like, are you Ping? Are you Erwin? I was like, wow, okay. Yeah. But
Charles gets that too. So back to the coaching program. So how does that work? Is it largely education and people just bounce ideas off you? Like I think this is what I see. This is the time I should be entering. Like what?
Yeah, I was just on the Shade the Humble Traders YouTube. If you guys want to check out that channel, I share our beginner strategy. That's really just a wheel strategy. I know you were teaching that as stock hacker, just like individual stock,
Oh, sorry,
selling
you start with
puts.
the most basic, you do the wheel?
So that was just beginner course. And then we have
Okay.
intermediate and our set and done.
Right.
But then set and done is spreads
Right.
on S&P 500. We have a whole accelerator.
Right.
So most of our students start trading our second week. You're like, how do we do that?
Right.
Because we have tests on so many things and take out things they don't need and put in the things that they really need. And we have coaches now that are on them. They're accountable for them. Every week they will text them. And we have challenges in our group where, you know, people share their trades and we have like members' results. Everyone see everyone's resuls. And then
Really?
yeah.
You
Like
have a scoreboard?
yeah, I have a scoreboard. Like
Everyone can see it?
yeah, everyone can see it. So I'm just showing Erwin right now if people are watching this. So this is our members, like, yeah, I don't know here. So there's like 29
People can opt out though, right?
people 29 people online. There's like 115 people offline, and they can see this group and they literally screenshot of their trades, a screenshot of their results,
Got it.
whether it's winning or losing. But most of them are winning. There's a few Cowboys in there I don't praise about, but yeah, this is where we do that. And of course the group is more like easier for coaches assigned with students, easier for them to answer them, and then covering for each other. So there's like the people who are starting, the people who started ahead of them, the people who are started years ahead of them, and there's our coaches, our handpicked, has to be with me for 1 to 4 years, hit double-digit return consistently, went through different market cycle, and we test them how they gone through it. If they're very calm, then we know they have what it takes to be a coach. So, and then above there's Steven and there's me. So I'm not very hands-on on this anymore. People know it, and but we have so much engagement in this group. It's phenomenal. It's like 50 plus message. But it's not like people bragging about things with, hey, something dog coin going to the moon. People are like, this is my trade. This is why I make this trade. And I saw that trade. I would like to challenge you why you think about that. This is what I seen. So it's like very constructive. So it's I'm very blessed. Steven did a good job and all the coaches did a good job. So I'm more laid back and focused on building the business, getting more, helping more people, also building the generational wealth. Right? So
Yeah, that was one thing I didn't like about Stock Hacker Academy is how many Cowboys we had.
I still have a few, and they know they are. I got on a call with them and said, guys, but the interesting about my Cowboy is that they think this is their play money, and their play money could be $500,000. They can go.
As long as they're willing to lose it.
They can go up 80%. Like some of them go up 80% last year. Within a month, went back down to 10%. And I'm just like, how do you feel? He's like, Cody, I'm happy. I'm okay. I knew this was coming. Okay, but I just now that my team get on call, I sometimes get on a few calls if they're higher potential people, but I really make sure they don't tell me anything about. I love adrenaline. If they're single, they have no obligation. They just want to make the most money possible. I'll tell them straight up, this is not a good fit. Please don't come to me. I don't want that on my reputation, right? I'm very straight up now. But that took me years to figure out, right? So
I had a past student at Stock Hacker Academy, so she went on and tried to do more aggressive things. So she was literally trying to day trade GME, GameStop.
I feel like I maybe know that lady, but I'm not gonna say it.
You probably know a bunch of people who are doing crazy ass stuff like this. So that's one thing I didn't like about it, and that's one other thing I like about the idea of having regular coaching.
Yeah.
Right. And then you know. Yeah.
And we show our trades too. We show the receipt, go up or go down. If we need to active manage, I think that's what's lacking in the industry. It's a black box. We're not a black box. Like Steven has a trading plan on this channel, so I don't have to. I used to do
Steven's
all.
your brother?
Steven's my brother.
Yeah.
So if you look at Steven's trade plan, he will say, "This is my trade plan, short, medium, to long term. This is my actual trades," and he's keeping everyone consistent. So people can use that as a reference, not stock advice, but as a reference.
But a well thought out plan.
Well thought out plan, and someone I truly trust.
So then you hit in the mouth, you go back to the plan.
Not very often actually. Like,
but it's there in case you need it.
yes, once every year we're gonna get challenged. We're gonna decide: are we gonna take losses, or are we gonna roll out the position with active manager? There's like things we can do, but then only when S&P 500 move more than 10% one way in 1 month, then we have to do something. Otherwise, we don't really have to.
Right.
Yeah. So So yeah, like I said, move a lot of things out. Really, just spend 30 minutes per week, and it's because of this. I was showing on my Facebook Live. I accidentally went went live on my personal account. People might be so confused. I share people why I can only spend 30 minutes per week because we have Coach reading news. I have a full time Coach reading news, updating it at the end of the day, and he's more active on it, making more money. But I'm like, don't show your trades because this is not what we're attracting. Then Steven showed his trades and his trading plan for stability for our people. It's not about making the maximum money. I think Steven only hit 20% last year.
Only, yeah.
No, but maybe people argue that market went up more than that. Yeah. But it's about the consistency.
Yeah,
right?
you'd always balance everything. You always have to look at every return based on its risk as well.
Yeah, so if it's 20% every year from now on, I'm okay with it.
Yeah, if you're staring at a screen for 60 hours a week and you made 20%.
Yeah, that was my day trading life.
Yeah.
And I realized, oh my God, that is where my why here came out, and now it never went back again. Yeah,
because I think everyone would take the 20% return with a half-hour a week investment versus.
Yeah, it's return on time, right? Return on time. Of course,
we're not promising returns or anything.
No,
like, everyone's different.
Yeah, it could change tomorrow, but that's what we have seen. And
Do you have a requirement on how long people have to do simulated trading?
Depends. There are people with different calibers. Some people did like 3 months of simulated trading. But what we like to do, something we did this is our secret weapon. 2 weeks mark, we strongly encourage people to book their first welcome call, hand-holding call with our coach, because when they're afraid, when they're excited at the same time, we hold their hands, they share their screen, we make sure their account is set up properly, and we hold their hands to make their first trade. If this is my account, this is probably what I would be doing, not stock advice, in case they have any question. The reason for that is people need that momentum win. People need to see the money. When they see the money, they will see why they put in the time. They'll find more reason to put in the time. What we found in other coaching programs, when people don't get a quick win, momentumly or money-wise, they lost the momentum. So
But the quick win can just be actually entering a trade.
Yeah, and to see it take profit.
Who can't do it. Like you said, you have 70-year-olds. They generally.
It takes longer, like
it takes
3
longer
weeks
for
and all that.
Just to know how to use an app.
Yeah. So like I'm proud of my team because of our success rate, not because our return rate, of our success rate of people who come in and have results and continue to stay in. I have so many people been with me since day one.
Right.
When
I subscription model successful.
Move from courses, move to like the VIP only, and then back down to like the whole mastermind, and people just keep staying because psychologically it makes sense, and then money wise it makes sense, right? The front end is where it costs the most money, but then afterwards it's just small money to stay in, and they make 10x that. They're like, yeah, Cody, hold me accountable. Your team, please hold me accountable. Otherwise, I don't know what else I would be doing, right? And they love the community, so that's how we built it. That was take a long time and needs a big team, a huge overhead cost. But I totally think that's the program I would be looking for myself. So I built it that way, right? And I'm quite, engineer minded about everything. I want the most support, higher chance of winning and all that. So
it's less returns are acceptable if people are managing their risk a lot better.
Yeah.
Because I remember people were just chasing yield, which is just gross.
And then
they keep sliding on the quality of stock they're doing. And then also if we're talking about like 2020 or 2021, like it wasn't really a lot of time to be buying stock. It wasn't really time to be getting into it. Folks should have just focused on making their premium and getting out.
Yeah, and that's again. Is that the really right mindset? I don't know. Now we don't need to own any stocks right now because we're doing spreads. For people who don't understand, there's a whole YouTube channel of mine. Go check it out. Or Humble Traders, go check it out. Or TD Bank, go check it out. But we don't intend to own S&P 500, and we cannot on the future option.
Well,
so we're
at all-time highs as well. Do you really want to own it now?
But just the future option do not allow you to do that. It's a cash settle. We're playing probability to the max. So that's our fast money, right? I forgot to introduce this fast money, medium money, and slow money. Fast money in real estate is flipping, wholesaling, realtors, things like that, right? In fast money, in the stock option role, in my opinion, is our set and done strategy. We spend 30 minutes per week. We close our position every 10 to 20 days max. money cycles, or you need to take the money out to buy real estate, or take the money out to buy stocks or indexes, you can do it. Our medium money is the wheel strategy of selling put options, cover calls. You can own a stocks you want to own at a cheaper price. And then the slow money is my TFSA, my RSP money. I just do cover call strategy in there, or I literally just go buy S&P 500. I just share a screenshot. It was at 40%. That was technically more than my said and done strategy, but that doesn't happen every year, right? So we balance out the fast, medium, and slow, right? So I mean, so that's the way I look at it. If anything stops, I have fast, medium, slow to cover. I have that in real estate. I have that in stock option. So, and I have whole life insurance and 1 Bitcoin. And
Bitcoin's one of the ones that's gonna make you rich. I'm joking. I have no idea.
I really don't follow, and I truthfully, up until this point, I couldn't find someone I trust enough that can talk the sense out of me of why NFT makes sense and why
that never made sense.
There's so many risks. I just don't need to get involved, and big money cannot get involved.
Right.
So I don't want that. Yeah.
The securitization of NFTs, I understand, like to make
to make it transactional and things like that. Real estate can even do that for deeds and all that. There's a true purpose.
Sense. The technology makes sense.
Technology not where the price part doesn't make sense.
Yeah, owning that stuff didn't make any sense.
No.
Yeah.
And that's where I'm very careful. I never had anyone on my podcast talk about it. And I could be missing out, but there's so many things I'd rather miss out than be wrong. Now I just want to have the highest chance of winning. Yeah. If I make a few right decisions, I'm like Warren Buffett, sitting there and have a good life.
Yeah.
Right.
And so you deliberately do choose to diversify though, because you're still buying income property. Are you still holding all your Ontario properties as well?
All of them.
You're continuing to
I am. There's cash flowing, but
you have a lot of capital tied up.
Yeah, all legal duplex, all the ADUs, I'm still holding it.
Yeah.
I'm waiting for the market to turn around. And maybe I will. I already calculate all of them, like how much tax I need to pay. I already chat with accountant again. If you want an accountant, talk to Cherry Chen. Right, Cherry Chen used to help me a lot. Very great. Just now I'm in the U.S. side. I have to like piece everything together, find the right thing. I know Cherry's coming out with that as well, so definitely talk to Cherry. But for me is, I will like I said, diversify. I don't go all in. Anything in U.S. will be coming from my trading profit and my business profit, and I will start dumping into US. Everything in Canada will stay in Canada. Because right now, unless I say I want to give up my Canadian tax residency, I need to basically declare everything, unless I do a Section 85, right? And I don't know if I want to do that. But if I don't do that, if I move to US more than half a year, I'm going to get into trouble. I don't want to pay capital gain. I calculate it, I'm like, it's not really worth it. But it's all in corp already.
I'm talking to someone about that. I can lend my RSPs to my US entity. So let me research that first.
Yeah, research that. I'd like to know.
My boy Scott Dillingham is going through the process himself.
Yeah.
So I never heard of this before. So
I never heard it before. I know.
So because you'll have a massive tax bill to pay, and that's the number one question I get. What are you gonna do with the capital gains? I'm like, pay them. But yeah, ideally.
So far, that's what I've been told as well. Right. Cody, just pay them as part of the game. Yeah. As long as you don't roll it personally. If you roll it personally, you might as well pay all the tax, because it's taxes integrated in Canada, right? But if it's just up at the corporate level, I can just move from my holding corp to the active corp.
My point is because I have some in personal name.
Properties
I sold are in personal name, so it would make sense to investigate this. Contribute to RSP and then tax shelter that money, move it to lend it to the state, my state U.S. Entity. But I'll keep you posted on how it goes.
Keep me posted on that. Yeah. So I still want to leave this stuff here. I don't know why.
Go up here. It's just
so Canada is in my opinion, a pure appreciation play now. Yeah. It's kind of like Austin, Texas, but then in my opinion, Austin is way stronger than the place I'm buying, because
Austin is remember, it's Texas, no rent control, so your rents can go up and improve your cash.
Yeah.
They better go up, because your taxes are going to go up.
Yeah. I just went through not eviction, but thank God we were very diligent on giving all the M4s, and they were great tenants. We vet them really diligently, but they changed, because of marital status. Couple broke up. Yeah. So they were truly want to catch us. So, knock on wood, so far so good. I don't have to evict anyone yet, but really I have not. I just for people's sake, like I believe tenant truly want to pay and all that, but if you have to do what you have to do as a landlord. So sometimes if it's a new student, new job, don't have a long history, put your parents on it. I don't care if you're a student or not. If your parents will back you as not just a guarantor, put their name on the lease. But even that, I don't have much.
Yeah, if they're an international student, you don't have much.
Yeah,
right?
I still no leverage. So that was the part that I don't like. But I still believe in the greatness of people. But
or have them get insurance via like single key or something.
Yeah.
Rent insurance or single key.
But then that cost will go up a lot, and that erodes your, you know.
Oh yeah, I know.
So
we don't have to do any of this stuff in the States though.
Yeah.
And then single key is like 4% of rent, right? So there's a cost to this.
Yeah.
But tenant risk is significant.
Yeah, there's no. So like purely everything in Ontario just appreciation play. A little bit of cash flow, I'm happy enough, but I can't refi. A lot of my properties are 50% loan to value, and I can't pull out more money. I don't want to. What am I gonna, So I just leave it there.
I think a lot of people I already see a lot of people are selling right now. Like if they have an event, for example, if the tenants are leaving, they sell. There's people are selling right now.
Yeah.
And I think people are just hanging on. If we get to back to the peak, I'm sure lots of people are selling.
Yeah. So I'm waiting for that to come back. I don't want to sell before I see that big turnaround, because you be greedy when others are fearful. Right now, people are still kind of fearful. That's why they sell, where they think they can move into something better. But I keep having money coming in, so I don't want to touch that part. I want to. If I can wait 6 months, the price goes up $100K. It's worth it. Worth for the wait.
Hopefully.
I'm not banking on it. I can leave it for the rest of the life, if pay down all the time. But is that the money best used? I don't think so. The return's not. For the past 2 years,
50% of your money's tied up.
Yeah, it's really the 50%.
That's a lot of money tied up.
Yeah.
Right.
Yeah. So.
Cody, where can people learn more about your coaching program, and you have 3 YouTube channels? What's going on?
One YouTube channel.
One YouTube channel. What's it called?
As Cody Yeh Investing. I believe I sent you the link. So I have a Cody Yeh, Cody at CodyYeh.com /links. You can get everything. And I truly want to give value first. Okay. Everything you heard me say that you can do on your own too if you're driven enough. If you don't need the coaching, don't sign up for coaching. Coaching is only for people who don't have the time and truly don't want to lose money or lose time, really want to get there a lot faster. Only then those people should consider. Otherwise, if you're go-getters like me back in the days, you're willing to bump through a lot of walls, go for it.
It's like my golf game.
At the end of the day, I look at it, I'm like, damn it, that's a lot of time waste and money waste. Right?
I lost a dozen golf balls. Maybe I should take a lesson. Cody, thanks so much for doing this.
Yeah, thanks for having me.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.